Good morning and welcome to the Life 101 insurance call. My name is Jessica Nayote and I am licensed in the state of New York and Florida and South Carolina for life insurance and securities. And I decided that it would be best to make a conference call and a remote kind of quick educational tutorial to answer questions and catch up to the speed of us millennials. So thanks for jumping on. A lot of this was given to me by my mentor, Terrence Tormey, who is a CLTC, an AEP, a CLU, and a CHFC. Tormey's law is that there's two ways to be insurance poor: not having enough and paying too much. Now, if you're one of my clients, then you probably don't have that problem if you listen to me. But if so, or if not, rather, then maybe we can see if we can help you. So give me a few minutes and we'll go from there. Number one, every insurance policy should be reviewed at least every 2 years. All my clients have seen that, I bug them every holiday on their birthday and etc. Just saying kind of, let's check in, let's get together and see if there's been any changes. That's especially sure for things that have no guarantees like variable, universal, and whole life. You just want to make sure that everything's on track. It can be a big if not. I know back in the 80s that there were, during a recession, there was some universal life policies that were created, and then when the market started booming again and people passed away, they were actually given bills for their insurance because it wasn't properly funded. So you don't want to be that guy. Besides health insurance, insurance companies provide things such as life insurance, disability insurance, long-term care insurance, which is if something happens to you, you have a chronic illness, you have some sort of income. And then annuities. Annuities are things like the 403Bs, 401Ks sometimes, and then any retirement products that produce either a buy and hold or some sort of monthly income to the owner. Not one insurance company sells all the above, and no insurance company is the best at all the above. But some people are better at some products than others, and that's always fluid. So it's important to have somebody like me that's watching and has relationships with these companies to know where they're at and to do the research and to be unbiased. Agents that work or are hired by specific companies are probably going to be more biased towards that company because they're the ones paying them. I have the luxury of being employed by all of the companies, so I don't really have one biased more than the other. It's really whatever's best with my people. So let's see. So let's talk about life insurance. I think especially now that I'm in the business for a few years, I forget what is what. Right? What is variable? What is universal? What is term? What is whole life? So that's what we're going to get to real quick. Hi, Ben. So the first one is term insurance. That's a level premium, which means the premium does not change. What you pay for it is what you're going to pay for it for the set number of years that you sign up for. Typically, that's 10, 15, 20, 25, or 30. And then every different state has the maximum that you can have it until. I think in the state of New York it's 75. So after 75, if you have these products and the state doesn't allow it, then the policy will be canceled. When shopping for term, pay attention to the financial strength of the company, how much you're paying, and underwriting results. The process of life insurance is you either apply for it online or with someone that knows what they're talking about. You apply, you see a nurse. Oh, And depending on how the results go with the nurse, that's what you're going to be rated as. So your rating is as good as gold. So, you might get a basic non-smoker rating. You might get a select preferred rating. Or you might get a standard rating, which is less. And then you want to shop for the amount of time that you're going to want to have the insurance for. So depending on what your purpose is for it, it could be 10 years, it could be 30 years. You don't have to have it for that whole time. If you decide that the need is no longer there, you can always cancel. But typically anyone always has some sort of need for life insurance. Usually everyone either owes someone or they love someone. All right, so another good thing about term is the conversion. A lot of these companies you'll see will offer term that converts to whole life, and you're going to see how important whole life is in a minute. Whole life, also known as permanent. So we have term that is good for a term of your life, and then we have whole life, which is good for your whole life. All right, so there's a few different kinds of permanent insurance, and that is always going to be for the term of your whole life. They usually insure one person, so unlike the term, there's usually not many survivorship or second to die. Erase that. Those are the two exceptions for whole life. So whole life, we've got the basic whole life is the most expensive. It's got bare minimum. The purpose is to obtain cash value and to insure someone for the rest of their life. Now we've got a blended whole life, which has a lot of different design options, strong guarantees, and is the second most expensive. And then we've got things like variable life insurance. Now, variable life is whole and universal, and it's the riskiest contract on the market. It's service intensive, which means you need to have a life insurance agent that is constantly checking the market, checking your profile, and making sure that it's funded similar to the situations that we talked about earlier. Indexed universal life has minimum guarantees and is very risky. That's recently come out, probably in the past decade or 3. Universal life has weak guarantees. The design is flexible, but it's very risky. No. Not your video yet, Ben. Guaranteed universal life, strongest guarantees, lowest price, very little cash values. Again, I don't usually sell variable and universal, and pardon my why. That was the reason why I do everything I do. And I also have another here. That's why I'm a little distracted right now.
Yeah, look at that.
Insurance companies are more different than alike in terms of their financial strength, underwriting results, premium cost, policy performance, niche products, contractual provisions, and target markets. That's a lot to digest. But there are companies that are more good at, disability insurance, whole life, based on their products and their terms. Depending on who's in the market. Prudential does a lot of stuff in the market. New York Life does a lot of whole life. It's what their meat and potatoes product is. Places like William Penn and Bankers do a lot of disability, health insurance, things like that. So regardless of what company you're with, you want to make sure that your contracts are checked out every couple of years. And you always want to have a financial analysis every year anyway. Okay, so disability insurance is not something I sell. I do not have my health insurance. I also don't have my auto or home insurance. But I do have people on my team that sell those products that I would trust. So if you're with me, you like me, you work with me, then I do have those options for you. Health insurance, disability insurance specifically is critical to a financial plan, especially if you're a business owner like myself. Business owners are the niche that I particularly work with, or young parents. What does disability income do? It protects your income due to accident or illness, right? You need to have if you're a female business owner, you need to have that as well as FMLA insurance in order to get maternity leave or any of the benefits from New York State. So business owners, you want to get that. It protects the overhead expenses like salaries, rent, and utilities, equipment, things like that for your business. We can also use it as a buyout. So there's buy-sell agreements that we use for life insurance that give cash used to buy the disabled person's interest. And a lot of these far-out concepts that we use in business ownership and succession planning that you'd want to make an appointment, because we're not going to get to it today. We're already over time right now, so I like to keep my promises. Do not cancel or replace any old policies. Don't stop paying on them until you talk to somebody, because then what happens is we find out, I just canceled my policy and I'm not insurable anymore. I just lost all that. I had money in my account. I had no idea. I love when I'm working with somebody and they have no idea that they have cash on the balance sheet because they have a whole life policy. Long-term care insurance, so there's two main types. There's the partnership with New York State. You have to buy X amount daily benefit for a set amount of years. It usually contains a cost of living benefit as a set percentage. So we want to get 80% of our salary, or we want to get 60% of our salary. That's going to be based on that X amount of years and paid X amount of days or years. It can be an individual or two people together, married, unmarried, or same sex. And then we've got a flexible design that gives options like you can share the policy. When we're talking about employees or things like that, pick a daily benefit, pick your elimination period and benefit, cost of living or set amounts or not at all, return of premium riders, and no home care elimination period. And the cool thing is typically with these sort of disability insurances, it doesn't have to necessarily be a nurse that gets paid to come to your house. It can be a spouse or a loved one that can also get paid to take care of you. Long-term care has been in the market for a few years, so there's only a few insurers. So be careful. Make sure that you get advice. Don't do it on your own online. Same with annuities. They're designed to provide income similar to the 403b, 401k, and retirement plans. There's 3 types of annuities, similar to there's a few types of insurance. The annuities are fixed, variable with no guarantees, and variable with guarantees. Variable annuities are very complex and oversold. Not everyone is a candidate for a variable annuity. This is not something you should be doing online. I don't even think it's legal. They're viable in certain situations. However, there's thousands offered by hundreds of companies, and only really 4 or 5 should be considered. So I guess if you have any questions, feel free to let me know. If you're looking to get any quotes on anything, then contact me and we will make an appointment, or I'll give you a couple questions over the internet or phone. I hope you have a fantastic morning. I hope you kicked ass this week, and I look forward to seeing you guys again. Have a great day.